Housing starts coming in month on month, coming in weaker than estimated, coming in 1.5%. Also for September, revised lower to 5.5%. And building permits kind of in line-ish, down by 0.6%. We thought they were going to be down 0.8%, so a little bit better. And I do have to say that September was revised up to almost 2%. So on the permit side, it doesn't look as bad. The starts, obviously, you got permits, then you have starts, a little bit grim there.
Well, and it looks like they are. The headline on the Bloomberg says starts rise on rebound in apartment groundbreaking, which is an interesting. We'll have to explore that a little bit to figure out, whether this is a multifamily story. It feels like more broadly, we talk a lot about growth in cities rather than suburban and exurban areas. So also interesting to see how that plays through the market, whether investors, start to go into some more apartment-centric REITs, or whether there's what sort of reaction we get to these numbers. Obviously, housing is something people always look at, and especially on a day when we're so focused on retail and what that says about the state of the consumer, housing obviously very close to consumers' hearts as well.
Oh yeah, and considering that homebuilder sentiment yesterday was terrible, the worst since 2014. Affordability has been rising, 30-year mortgage rates has been rising. It's not been pretty.
All right, so still with us is David Kotok of Cumberland Advisors. So David, you look at these numbers as they come through. How do you feel about housing at this point? You live in Florida, where obviously housing is very much on people's minds.
We're in such a state of boom, you can't see straight for the cranes and the trucks.
Right. And is that going to continue? Do you think, look into your crystal ball for us here?
Well, my crystal ball is always cloudy. The best forecast is from 3 quarters ago.
There you go.
So we never can be sure. Do we keep mortgage interest rates at this level? Does the Fed engineer them higher? I think not. And therefore, we're making an adjustment. We complete the adjustment. We get to a housing sector, and it has balance to it. It was booming.
Yeah.
It's, nothing booms forever. You go back to a baseline. If we get a recession, a whole different story. I'm not a believer in the recession forecast.
You're not a believer in the recession forecast for 19? Or
19, no.
Okay.
For 2020?
No, I'm not so sure of that either. I think too much stimulus, too much deficit, and if the Fed doesn't kill it, and if trade doesn't kill it.
Well,
those are the two ifs.
Those are two kind of big ifs you would concede, I would imagine.
Yeah.
So when you take a look at housing, those stocks have been pummeled. They're off like 30%.
It's true. So look, our time horizon when we manage portfolios is 6, 12, 18 months. That's the kind of time horizon. And so for us, this is opportunity. You seize opportunity when things look ugly, when people are scared, when prices have corrected 15, 20, 30%. That's when you want to be a buyer, not a seller. So for us, we have been scaling into this market since the sell-off got serious.
And scaling specifically into home builders at this point?
Well,
you said retail.
No, we didn't buy the home builder ETF, but we did buy consumer staples. And we did it equal weighted with the ETF rather than cap weighted because the cap weight has too big an international component, and there's the trade war problem. So you could go equal weighted instead of cap weighted and get in the sector that way.